How many of you guys like puzzles? Are you good at finding patterns? If you answered yes, then you have the potential to be able to read charts like I do. I personally use TradingView to track charts before I make my trades. It's free, simple to set up. It's a web application, meaning I go straight to tradingview.com for charts, and I don't have to download any desktop applications on my computer. So here I'm pulling up the chart for SP500 index, ticker symbol SPY. It's currently trading at 379 range, and it's recently had a major move up during the past few days. Is it a pump? Yes. Are we going down? Maybe. Can we go up more? Possibly. My personal trading style is to look for patterns from previous chart history to give me proven potential price movement in the future. The basic price action psychology is, in trading there are two different types of resistance. We have the ceiling and the floor. Just like in your home, if you step on your first floor of your home, you won't fall into your basement until pressure downward. The same concept applies to ceiling. Let's say you can jump like this guy. If you try to jump from the first floor to the second floor of your house, you have to break through your ceiling first to get to the second floor. In trading, we call these ceilings and floors as key resistance levels. The candle breakdown is, you need to understand that this chart is nothing special. It's simply just data of millions of transactions, and certain candles tell more stories than others. These specific two types of candles are absolutely the most important for my trading style. Something these two candles have in common is the shape, short body and long wicks. The difference is the direction each candle is pointing towards. The first candle has a very short body and a long wick at the bottom. The short body means possible loss of momentum, and the long wick on the bottom means every other trader is rejecting that price, meaning the price has a strong floor at this specific level. This signals to me a movement back up is just around the corner. If we flip this candle upside down, the same principle applies. Short body, long wick, every other trader is rejecting the price at this level and came back down, meaning the price has a strong ceiling at this specific level. The next trading fundamental I like to use is an indicator called the Relative Strength Index, also called as the RSI. This is an indicator that shows the level of overbought versus oversold. This applies to the buy the rumor, sell the news concept. The lower the RSI level, it means it is currently oversold. The higher the RSI level, it means it is overbought. Also, and I want to share with you guys that Bitcoin was 69,000, soccer moms were talking about crypto in local cafes. When soccer moms and grandmas start talking about stocks in crypto market, it's probably best to prepare for an inverse direction. Here's a tool I'd also like to introduce you guys called the Greed Fear Index. If you don't have soccer moms and grandmas at your local cafes, then you might be able to use this tool as an alternative. How to draw your lines to find a trend/pattern. In a downtrending chart, you must place your lines so each wick hits the line as many times as possible. So for downtrend, you draw a line on the top. We're going to leave this downtrend line here and first look for a key resistance level. So we're going to go here to our drawing tool, get our horizontal line. Currently at this time, it looks like we have more touch points. 1, 2, 3, 4, 5 here if you kind of look here. And here, if we take a closer look, it looks like, yes, we are on an uptrend. However, if we take a closer look on the smaller time frame, it seems maybe not so much. We have to take this into consideration that on the bigger time frame, yes, it looks like we are still going on a downtrend. And on the smaller micro level, it does look like we are on an uptrend. However, you want to gauge all these together and get the best pattern. So this is what I'm doing when I'm trading. I'm looking for patterns consistently of, is this correct or is this correct? This might be the correct one. So I don't believe, judging from this hard rejection right here, I don't believe that this stock, that the S&P 500 is going to be able to break this. It may attempt to try to cross this path again one more time, but I strongly believe it's going to be a strong rejection. So here's kind of what I'm thinking might play out. So we're going to do this, maybe inch back up, try this level, have a little pop, maybe do a little consolidation or something, and eventually keep doing this along this line. And then we're going to do this and do a little pop and maybe test this level again. Again, this is our ceiling. Test this level. I highly doubt we're going to break that. Come back down. And we're just going to keep doing that over and over again, possibly until the Q2 or Q3 of next year. So this could actually mean both sides. It's honestly it's a 50-50 guess. It could either just drop down here or it could pop off from here. Hey, if you guys found this video to be extremely helpful and educational, please like and subscribe and hit that bell notification. It really helps me out. If you're a new trader, welcome aboard. Welcome aboard to this shitty boat where you're gonna lose a lot of money probably the first 1 to 2 years, but once you've kind of learned your lessons, you're gonna make progress. So by the next video, I'm gonna be coming in with my own money, test out my theory with options trading first. And if you guys want to know some my own opinion on some of the crypto coins, shill your coins down below. I'll try to do my own technical analysis and share my opinion. So thanks so much for watching till the end, guys, and I'll see you guys in the next video, okay?